going to be talking about the Federal Reserve's monetary policy strategy, the real monetary policy strategy coming from the Federal Reserve, not this made-up one coming out of the mainstream media that everybody has misunderstood over the last 5 years. Now, I have many times on this channel tried to explain, show through the documents coming from the Federal Reserve itself, and explaining how it is that the Fed is not going for a 2% target, but attempting to achieve a 2% average inflation rate over time, which means that appropriate monetary policy will likely aim to achieve achieve an inflation rate that is moderately above 2% for some time. Now, I have tried to explain this so many times in many different videos, and oftentimes I still get pushback from a lot of people who are saying, no, it's a 2% target. They say it all the time. It's constantly being reiterated out there. And I find this to be very misunderstood. It's not correct. Now, I left down in the description a link to a news article. I think it was coming out of Barron's. And if I remember right, it's behind a paywall. There might be ways you can work around it. I use Telegram. I'll drop a link into the Telegram app, and a lot of times it'll come up with something that they call a quick view, or an instant view, or that you might be able to work it around through a VPN or something if you don't want to pay for the paywall in order to see the article. But it ultimately is saying everything that I have communicated out here on this channel over the last 5 years when it comes to the Fed's strategy. Now, when you think about the Federal Reserve and how it is that they conduct themselves, typically most people would look at their inflation idea that they are going for a target. That if inflation is above 2%, they'll try and bring it down to 2%. If it's below 2%, they try to bring it up to 2%, but try and maintain this target. And this is what a lot of people feel or think that the Federal Reserve is attempting to do. Now, inside the link, again, the news article goes to break it down and explain how it is that the Fed is not going for a 2% target, but going for a 2% average inflation rate over time, a flexible average inflation targeting. And it was stated in the Statement on Long-Run Goals and Monetary Policy Strategy. Now, this is going to be reviewed again very soon. And the Federal Reserve will have a new statement on long-run goals and monetary policy strategy. And the wording will change. As of right now, this wording says this: the committee reaffirms its judgment that inflation at the rate of 2% as measured by the annual change in the price index for personal consumption expenditures is most consistent over the long run with the Federal Reserve's statutory mandate. The committee judges that long-term inflation expectations that are well anchored at 2% foster price stability and moderate long-term interest rates and enhance the committee's ability to promote maximum employment in the face of significant economic disturbances. So ultimately what they are saying is that they can maintain somewhere around a 2% inflation rate. This is best for the monetary policy, as they are able to then achieve a stimulus or whatever to try and maintain the employment. I don't know if that's exactly how it was worded, but ultimately if they have problems with employment, if they have a 2% inflation, this gives them the appropriate monetary policy stance in order to address those situations. Now, it goes on to say this: in order to anchor long-term inflation expectations at this level, the committee seeks to achieve inflation that averages 2% over time, and therefore judges that following periods when inflation has been running persistently below 2%, appropriate monetary policy will likely aim to achieve inflation that is moderately above 2% for some time. Now that right there is where most people, like 99% of the people, missed it. They do not understand that the Federal Reserve is in what they refer to as a makeup strategy. You can go and Google this for yourself. I didn't leave a link down in the description, but if you just Google Federal Reserve's makeup strategy, right, and you will find plenty of evidence and documentation showing how the Fed has made the actual strategy, made the statement, made the I don't know, like the appropriate positioning of their Fed funds rate to try and achieve an inflation rate that is moderately above 2% and try to maintain that. What I find very interesting about this is most people are looking at the Federal Reserve and believing that they are failing at what they are doing because they cannot get the inflation down to the 2% target, because that's what 99% of the people believe the Federal Reserve is attempting to do. That is incorrect. Nothing could be further from the truth. The Federal Reserve is attempting to maintain inflation moderately above 2% for some time until they change this strategy. This strategy is coming up for review and will be changing soon. And we could find where the idea of having inflation moderately above 2% could change. It may be wiped out. We don't know because they haven't come out and stated it yet. They haven't formed the strategy to even state it out there for the people to then even review or look at. It hasn't happened yet. The old strategy is still in play, and nothing has changed about this. So as most people are looking at the Federal Reserve saying they screwed up, they don't know what they're doing, they're flying off the seat of their pants, they're immediately data dependent, right? They're not taking into consideration what it is that the Federal Reserve was facing 5 years ago, or even 10 years ago, really, which led to this 5-year strategy of trying to attempt to make up for the fact that they failed to achieve the inflation rate of 2% after the great financial crisis. See, when we're stuck on the idea that money printing causes inflation and we leave it at that, it makes it very difficult to understand the Federal Reserve strategy. In fact, it makes it to the point that you cannot. If you have taken in that belief that the money printing is what causes inflation, you will never, ever, ever, ever be able to see the Federal Reserve's monetary policy strategies. Because the great financial crisis, which had taken the Fed's balance sheet from $850 billion to over $4.5 trillion, failed them. Failed to produce the inflationary scenario that they were looking for. They were coming to an end. They were not going to be able to adjust monetary policy through the Fed funds rate in order to stimulate the economy. They were running out of power. In fact, they had run out of power. They were at the lower bound of zero. Interest rate adjustments was no longer an effective tool. Nobody seems to consider this. And when they ran out of the ability to adjust monetary policy through the interest rate adjustments, their main policy tool, when they lost that ability, when they hit the lower bound of zero during the great financial crisis, we're talking 10 years ago plus, when they hit that moment, they knew they had to come up with a new way. That's where the forward guidance, jawboning, signaling, however you want to call it, what I call credible threat theory, that's became the effective tool for the Federal Reserve. As most people are so focused in on interest rate adjustments as their only tool, they are missing the fact that the Federal Reserve is flapping their gums all day long, out there in the mainstream media, pushing the narrative, having people believe things within their idea of what it is that they're attempting to do, having the markets believe this coming out of the Federal Reserve is pure gaslighting. It's never been better. Like, never been a better example. They have absolutely become the most efficient gaslighters in history, using the mainstream media as an effective tool for distributing that information, which totally misguides the people. I find this monetary policy strategy to be absolutely incredible, considering that they have stated it over and over again, but not to the mainstream media, not to the markets, not to the people within speeches that are addressed to the public. They talk about it themselves. They talk about it amongst each other. Here, that same time. Where is it? I got it in here somewhere. Where is it? Powell. There we go. August the 27th, right? Right after this monetary policy strategy. This is what Jerome Powell had to say. Persistent undershoot of inflation from the 2% long-run objective is a cause for concern. This was in 2020. This is before the inflation happened, guys. Think about this for a second. This is before the inflation took place. The Federal Reserve had expanded their balance sheet from $850 billion to over $4.5 trillion the previous decade, failed to produce the inflationary scenario that they were looking for, and they were scratching their head saying, how is it that we're going to find inflation? We can't seem to do it. We took our balance sheet, printed all this money, most money printing in history. Even considering the most recent money printing, there was more money printing taking place during the great financial crisis on a percentage basis than had taken place during COVID. And it still failed to produce an inflationary scenario. Most people are not considering the money printing didn't work. It didn't create inflation back then. This is what he had to say about it. This is what Jerome Powell said in August of 2020. The persistent undershoot of inflation from a 2% long-run objective is a cause for concern. They were concerned. Yeah, major cause for concern. Many find it counterintuitive that the Fed would want to push up inflation. The Fed wants to push up inflation? Straight up said it. Many find it counterintuitive that the Fed would want to do this. Everybody, 99% of the people find it counterintuitive. But not the Federal Reserve. They found it very intuitive. They needed an inflationary scenario, a persistently high one. This is back to Jerome Powell's speech. After all, low and stable inflation is essential for a well-functioning economy. And we are certainly mindful that higher prices for essential items such as food, gasoline, and shelter add to the burdens faced by many families, especially those struggling with lost jobs or incomes. So people lose their job, they lose their income, everything is starting to go up in price. And that's a horrible feeling. It's painful. And the Federal Reserve is very well aware of this pain that people experience. They know that it happens. They know that it's stressful. It's horrible. People actually start taking desperate actions during this time. The Fed is well aware that it occurs. Inflation creates this situation within the economy, within the people. You know what they had to say about that? However, even though this is a really painful experience, however, inflation that is persistently too low poses serious risk to the economy. Too low of inflation is a serious risk to the economy. This is what Jerome Powell was saying in 2020, before the inflationary scenario. Okay. Goes on to say, inflation that runs below its desired level can lead to an unwelcome fall in long-term inflation expectations, which in turn can pull actual inflation even lower, resulting in an adverse cycle of ever lower inflation and inflation expectations. This is the problem that the Federal Reserve was facing. Too low of inflation and inflation expectation, and was interfering with their monetary policy. Even though they know that inflationary scenario is going to be a very painful experience for the people who are at the very bottom of the line, they were okay with that because you know what? Not having inflation is a very risk to the economy. So even though you're going to experience a bunch of pain from it, that's just too bad. Right? That's what the Fed is saying. It's just like, hey, it'd be far worse if we don't create this painful experience for you. To prevent this outcome and adverse dynamics that could ensue, our new statement indicates that we will seek to achieve inflation that averages 2% over time. Therefore, following periods when inflation has been running below 2%, appropriate monetary policy will likely aim to achieve inflation moderately above 2% for some time, just like the statement was saying. This is very important to internalize. This is probably the most important thing to internalize right now, considering that most people, literally 99% of the people, have no clue about this. Not the economists you see on TV, not the news anchors, none of these people, none of them. Like, I very rarely ever hear anybody ever say that the Federal Reserve was attempting to achieve inflation that was moderately above 2%. I feel like I am the only one. Right? I don't know. Maybe there is some other people out there who's saying, the Federal Reserve is attempting to achieve this inflationary scenario exactly where we are at today. I feel like I'm the only one because this is exactly what they are saying from their own strategy statement. This isn't like me making stuff up. This is their own words saying we are planning on doing this for the next 5 years. And just recently they are saying, hey, that 5-year strategy review that we talked about with the flexible average inflation targeting and the moderately above 2%, that is coming up for review, and we may change that in 2025. This is why it's important to follow the Federal Reserve statement, their long-run goals, their strategies, and the consideration of some of the things that they have been talking about within their strategies going all the way back to early 2000s, even before that. Once you see it, once you recognize it, then you know that their forward guidance signaling jawboning that they put out there on the mainstream media is literally straight up 100% propaganda. And you can't look at it any other way. You just literally cannot look at it any other way. You have to look at it that way because that's their strategy. That's how they are using it. That's the credible threat theory. The mainstream media is the tool that they use in order to distribute the information that they want people to understand and believe. And it's incorrect. It's gaslighting at its finest. I can't explain it any better than that. Something interesting, talking about this particular thing, because this is not new. This is information that I have brought up many, many times in the past. And I had a viewer, Alex, who sent me an email. Thank you very much for that email. I know I didn't respond to it, but I'm going to respond to it right here on this. And he used Grok. I'm not familiar with it, the X's AI chatbot. And he asked it some questions about the old inflationary scenario. And he finally had to grill it, right? To try to narrow it down. But this is the question. He says, are you saying that the Federal Reserve has a target inflation of 2%? Right? Because he was trying to figure out whether or not the Federal Reserve is going from moderately above 2% or 2% target, right? Because the AI bot came back with a 2% target. They are trying to achieve a 2%. The answer, after he finally, grilled it down, are you saying that the Federal Reserve has a target inflation rate of 2%? This is the bot's response. It says, yes, the Federal Reserve has a long-standing target inflation rate of a 2% over the long run. The target is part of their dual mandate to promote maximum employment and the price stability. The 2% inflation goal helps to anchor inflation expectation, which in turn supports economic stability by providing a clear benchmark for business, consumers, and policymakers. Very textbook response when you think about what it is that the Federal Reserve is up to. When somebody asks that question, is the Federal Reserve targeting an inflation rate of 2%, and this is the response that you get, you would just assume that's accurate. It sounds accurate. It feels accurate. According to many things that you hear out there on the mainstream media, that seems like a very accurate answer. It couldn't be further from the truth. Right? It straight up could not be further from the truth. He goes on and asks this question and refines it. Doesn't over long run imply an average inflation rate over many years? Right? This is the response coming back from the chatbot. It says, yes, quote, over the long run, in the context of the Federal Reserve's 2% inflation target, generally implies an average inflation rate over multiple years. This approach acknowledges that inflation can fluctuate in the short term due to various economic factors, but the goal is to achieve an average of 2% over time. The concept was more explicitly embraced with the Fed's adoption of the flexible, quote, flexible average inflation targeting framework in August of 2020. That's that monetary policy strategy review. I left a link down in the description for you guys. That's what it's referring to. Right? The framework allows inflation to run moderately above 2% for some time, following periods when it has been running below that level, aiming to balance out periods of low inflation with future periods of high inflation to achieve the 2% average over time. Right? This approach gives the Fed more flexibility in responding to economic conditions without being strictly bound to hit the 2% each year. See? They're not going for a 2% target. They're going for 2% average inflation rate over time with appropriate monetary policy seeking to achieve inflation that is moderately above 2% for some time. Goes on to say, yes, you are correct, but you said there is 2% target, which is what the media continues to push when 2% is not their target at all because it's an average. This is what he was replying to me back at, right? That was the end of this, the chatbot. Then the gentleman who sent me the email, he says this back to me. He says, yes, you are correct, but you said that their 2% target, which is the media continues to push when 2% is not their target at all because, and he's talking about the chatbot, because it's an average, they are happy with inflation being 2%, right? Square picture. So he was like, basically saying, within that they push that idea. Everybody says it no matter what. Even if they know the right answer, they still push that 2% target, right? Without any idea that they're actually pushing for a 2% average inflation rate over time, which has to have everybody believing that the 2% target is the target. If everybody knew and knows and believes that that's what the Fed is going for, then that's what they will achieve over time. Okay. What time is it? 20 minutes into this. Okay, we'll give it like another 10 minutes and then we'll call it quits. All right, damn dude, you're opening my eyes all-nighter. All right, what does all-nighter have to say? All night. All right. Enough of your talking head ranting. Tell us something useful. What? How is this not useful? That's what I don't understand. Like, here it is. You have an idea, an understanding of the monetary policy coming from the Federal Reserve that literally 99% of the people have no clue about. You are literally 1% of the entire nation, actually the entire globe, who has information that now knows for sure from the Federal Reserve that they are not attempting to get to a 2% target, but attempting to achieve 2% average inflation rate over time, which means that appropriate monetary policy is above 2%, moderately above. That is information that nobody knows, right? Nobody knows that. The handful of people who do talk about it have not internalized it to this fashion. They don't believe it. They believe that the Federal Reserve is data dependent off of flying off the seat of their pants every single 6 weeks or whatever it is that's going on in their mind. I don't know, right? They have got it very confused out there. On this channel, we have described this for years, believing this exact scenario, knowing that they had inflation or had interest rates extra low, extra long for an extended period of time to try and create an inflationary scenario to make up for the fact that they failed to achieve that 2% target over the previous 10 years. Once they got inflation extra high, extra long for an extended period of time, they were going to keep interest rates extra high. It's getting high and staying high. I did videos talking just about this. This information, even though it's constantly being reiterated out on this channel, which I know I've gone over the same information over and over again, if you do not take it into consideration with the information that you are grabbing on a daily basis, every single day, when you're out there watching the news and you're listening to that propaganda out there, knowing the true strategy coming from the Federal Reserve that you learned here on this channel, nowhere else, right? Nobody else has done it to this level. Once you have internalized this information, you're watching that mainstream media, and 99% of the people get it wrong, and you're the one person who says, no, that's not right. They're gaslighting, right? That's not their true strategy. I know their true strategy from their own statements, their own words, and sharing that information with the other central bankers out there, but not on the mainstream media. All right. Okay, so how do we use this information? That's the question. Alex, how is it that you have positioned yourself? You're not in the same position I am. Are you driving a 99 Ford Explorer and a 2001 S10 because you don't want to make a car payment? Is that you? Right? That's me. That's how I'm positioning myself. It's like I don't buy cars, right? I don't want to take out a car payment, right? I'm keeping my bills incredibly low. I'm trying to get as much income as I can. So I position myself with my income to be as high as possible with multiple forms of income and channels of revenue. I got my main job. I got my side hustle. I got another side gig going on. I try to find little things here on the internet to try and make money with. Right? That's how I'm using this information. I'm trying to position myself the best I can with the skills that I have learned. I don't know. You probably don't have the same skills I have. I certainly probably don't have the same skills you do. So what it is that you're planning on doing, what I plan on doing to get that income to come in is going to be very different from each other. right? I try to buy some dividend paying stocks. I mean, I haven't got a whole lot of it, but there's a little bit of revenue that comes in from that as those dividend paying stocks pay out, right? This is how I'm trying to get my income. I try to keep my expenses incredibly low, very low. Try to put that extra, whatever extra money is, money beyond the money you already make, right? Try to take that extra money beyond your bills and put it towards some assets that are going to go in price, that are going to move up. Try to protect you from that third-party claim. I mean, this is how I'm positioning myself. As much income as I can get, very low expenses. And I bought a house, and now I really feel like, man, I don't know if I can be that nimble and have a house. It would be nice to be able to travel to make money in other places if I was needing to. But buying this house in the area that I did buy it has given me a hell of a lot of equity in a home that I was not expecting to receive. So I feel pretty good about the real estate position that I put myself in. But that's very different from what other people can do, right? This is what I'm doing. I've shared it many times with people. How do you position yourself, right? You position yourself in this way. You take this information and you look at other people who are saying, oh man, the Federal Reserve is going to lower rates and I'm going to get a better rate on my mortgage. And you can think, well, maybe not, right? Because adjusting of interest rates is no longer the effective tool. How many people are taking that kind of consideration in? Not very many. How many people did you hear out there were hoping and wishing and dreaming when the Federal Reserve lowered their Fed funds rate that they were going to get a better rate on their mortgage? Everybody. It was all over the mainstream media, right? All throughout 2024, because of the dot plot statement at the end of 2023, everybody knew that there was going to be 7 interest rate cuts coming to the Fed funds rate over 2024. We saw 1 interest rate cut, 1 percentage cut. It was nothing like anybody was anticipating because most people are not looking at it correctly. They look at the mainstream media, they look at those statements, they listen to the talking heads, the supposed expert economist out there, and they fail to achieve the understanding of what it is that the Federal Reserve is attempting to do with their monetary policy strategy. Now, again, like, I don't know why it is that I feel like I'm the only one out here sharing this information, but this is what the Federal Reserve has stated themselves, not to the mainstream media, to each other, to the other central bankers. So when I look out there and I'm listening to people say, oh no, the Fed said it in their public statement, I'm thinking that is gaslighting propaganda, right? Straight up. Like, whatever it is they said in there is the monetary policy to try and guide markets' perception. That's the point. You know, nothing else. You have to take this information, you have to understand it for yourself so you can position yourself appropriately. I gotta go, guys. Let's see. I got literally 3 minutes to get back to work. All right. He is saying, stop your BS frivolous spending. Simple as that. Yeah. That's really what it comes down to. You know, people are asking, what is it that we can do to try and save the world, save the economy, save the American way, whatever. This is like, there's nothing you can do, right? There's no person we can vote for. There's no system we can set up. There is nothing that we can do. We are not going to be able to save it, whatever the hell that's supposed to mean. The only thing that you can do is position yourself appropriately for the conditions that we are now in. Now, if you want my suggestion on what we can do as a whole to try and fix this situation, is you have to stop buying luxuries. Stop enjoying the money. Don't raise your standard of living. Work twice as hard, buy half as much stuff, pay off all your debts, take all your money, put it into savings, invest it into production. Do this for generations, literally generations of people. Don't enjoy your life. Work really hard, save all the money, don't go into luxuries, don't buy foreign production, reuse, don't even use, in fact, don't buy anything. To suffer in misery and low standard of living, and you do that for generations, you might be able to create a situation in which that we could then be competitive enough against the rest of the world to try and be a manufacturing state again. Like, that's what it would take. It's not going to happen. It's like telling people don't enjoy yourself. That's not going to be the case. It's not going to work, right? So it's better to understand that we are on a path of separation between the rich and the poor. The inequality will get worse. The wars will grow bigger. The debt's going to grow bigger, right? The separation is going to be far, far worse. To understand that that is going to be the case going forward, and that you have to position yourself to try and get on the other side of the wedge. If you're young, you're lucky. That's what's sad about this, is that if you're young, you're in the worst condition possible, but you're also lucky because you will be able to take advantage of compounding interest. The older you get, the worse it is. And if you're on the bottom side of the wedge and you're 40 or 50 years old, good luck. It's tough. I know. I'm there. I'm trying to deal with it, right? Trying to get as much income as I can get, as low expenses as possible, putting my money towards things that are hopefully going to go up in value or have some sort of return on investment from it. That's the position that I have taken. There's nothing we can do to save it. You have to save yourself. There's nobody coming. There's no elected leader that can do this, right? I don't care who you vote for. I don't care how smart they are or how smart they think they are or how smart you think they are, right? This isn't going to happen. And I don't mean to be doomsday or so negative or anything else like that, but it's just the blunt truth of it all, is that once you figure out that there is no saving this system, that there is no cure, that there is no elected leader that can do it, then you can start working on it for yourself and positioning yourself appropriately to deal with it, because that's really what you can do. $4.99, your perspective is on point. Well, thank you. Hold the line. You guys are awesome. Thank you all for being here. Very much appreciate that support from that super chat. We got 230 people watching with 59 likes. Go hit that like button. Upload the video. We'll come back and continue this conversation going into the new year. So happy new year, everybody. Uneducated Economist, you let me know.